Hey everyone, it's Julie here with TipRanks. Today we're diving into a major shakeup in the auto industry. That's right, we're talking about the buzzword of 2025, tariffs. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. I'm sure you've seen headlines today. President Donald Trump has slapped a 25% tariff on all foreign made cars and select auto parts, and it's sending shockwaves through the market. Auto stocks are falling, Wall Street analysts are weighing in, and the ripple effects could be felt by both automakers and consumers alike. So today we're going to break that all down. Just before we dive into all of this auto tariff news, this is a reminder that right now TipRanks is having their end of quarter sale. So if you've been wanting to unlock some fantastic research tools, head on over to the TipRanks website to get 40% off premium subscriptions. And if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's dive right into all of this auto tariff news. On March 26th, Trump signed an executive order that will impose a 25% tariff on cars and light trucks not manufactured in the United States, along with certain auto parts like engines and transmissions. Set to kick in on April 3rd, the move is aimed at boosting American manufacturing. The White House claims that these tariffs could generate up to $100 billion in annual revenue and could spark domestic auto production. But here's the catch. It's not just foreign automakers that are feeling the heat. U.S. auto manufacturing giants like Ford and General Motors are also taking a hit today. Let's take a look at how the markets are reacting. Auto stocks took a nosedive right after the announcement. General Motors, under the ticker GM, seeing the biggest decline. They're currently down over 7%. Ford at one point nearly dropped about 5%. It's now down 2.8%. And even Stellantis down a couple percent as well. Tesla seems to be the only one that is immune, currently up 2.5%. While Tesla is known for their all-American production, they aren't immune. Elon Musk himself said that the impact of these auto tariffs would still be significant due to imported components. Why is that? Well, even US-made vehicles rely on a global supply chain, and these tariffs are jacking up costs across the board. So let's talk numbers. What kind of impact are these tariffs actually going to have? Analysts are predicting that these tariffs could increase the price of an average vehicle from $5,000 to $10,000 depending on the make or model, and that will have a big impact on consumers and is raising flags for investors. Foreign automakers like Toyota and BMW, who import a big chunk of their US sold vehicles, are facing a hurricane-like headwind, according to Wedbush analyst Dan Ives. And US automakers aren't off the hook either. Big companies like Ford and GM source their parts globally, and those costs are going to climb. When we look at what Wall Street analysts are saying about this, Wedbush analyst Dan Ives further elaborated, saying that these tariffs are a game changer for the auto sector, predicting short-term pain but leaving room for negotiation. Saying that these initial tariffs would push car prices up significantly, but that they believe this is some form of negotiation tactic and to expect more clarity soon. We also heard from an analyst at Bernstein, who estimates that GM's exposure aligns with their earlier forecasts, noting that 52% of GM's US sold vehicles are made domestically, but the rest and the parts could still sting. And when we take a look at Wall Street's overall ratings on some of these auto stocks, you can sense a bit of caution. General Motors is currently rated a moderate buy with 10 buys, 4 holds, and 1 sell. Ford comes in as a hold overall with 4 buys, 10 holds, and 2 sells. And Stellantis also coming in as a hold with 5 buys, 11 holds, and 1 sell. Wall Street and investors alike will be waiting to see if Trump doubles down on these tariffs or if there are some exemptions made. Of course, the drama does not stop at the US border. Canada's Prime Minister Mark Carney calls this a direct attack on workers, hinting at retaliatory tariffs. The EU is vowing to defend its interests, and Japan's PM says all options are on the table. With tariffs being a constant moving target this year, we will see if this spirals into a full-blown trade war. Trump's team argues that this will be a long-term win for American jobs, but only time will tell. So, what's the key takeaways here? Well, these tariffs are shaking up the auto industry. Stocks are down, costs are on the rise, and Wall Street is watching every move. For investors, this is a volatile time. Do you try to buy some of these dips, or do you wait on the sidelines until the dust settles? Let me know your thoughts on all this in the comments down below and how you're playing these recent trade war swings. I always appreciate hearing from you guys. Of course, these videos are never a suggestion to buy or sell any specific stock, so make sure you're always doing your own research and due diligence. Thank you guys so much for watching. Have a great day. I'll see you back here next time.